Hey guys, welcome to IPDAX Foundations. And today we're going to be going over fair value and efficient delivery. So let's get started. All right, so just as a preface, fair value and fair value gaps are not the same thing. The logic behind those two things are similar, but they are not the same thing. So don't get too caught up in the words fair and value, because you will already have preconceived notions about fair value if you use those words. So instead, let's use the words efficient delivery, because that's essentially all it is. And once we take a look at the chart examples, you'll be able to see kind of what I mean. And then just as an extra side note, I have in blue, sometimes the connotations that we have with certain words make certain concepts lose their meanings. So redefining things can be useful in helping us understand. So just a little something extra for just your other studies. So let's take a look at the next one. So the logic behind fair value or efficient delivery. So when price goes to and through a level with only one-sided delivery, that doesn't offer all the participants, which are buyers and sellers in the markets, a chance to get involved. Therefore, we can anticipate the markets to want to go back to those levels where it wasn't fairly traded. So I have some advanced logic as well. So if this is a bit too simplistic for you guys, let's take a look at this one as well. So for the advanced logic, I have when price is going through a level with only sell side delivery, there is unfilled buy orders there or buy side liquidity. And when price is going through a level with only buy side delivery, there are unfilled sell orders there or sell side liquidity. And that is one reason why price seeks to come back to levels of fair value in order to pair up orders with the counterparty and offer the potential for continuations. So I'll take a briefer or a more detailed look at this when we look at the charts. But just understand that the market seeks to, be efficiently traded. And that's kind of what the idea of fair value is trying to show on the charts. So let's go on to the next slide. So another thing that's kind of essential, especially for beginners, when trying to understand fair value is the anatomy or the formation of the wicks. So right here, I have a candlestick chart. So let me just annotate real quick. So this is a down close candle. And then this region right here, I call the upper wick. And then this region down here, I would call the lower wick. All right. And then consequently, this would be the upper wick for the up close candle. And then here I have the lower wick for that up close candle as well. So let's take a look at how these wicks form. All right, so let's start with the upper wick first. So in order to have this upper wick form, price needs to go up and then it needs to come down, right? Because that wick is just a rejection. So it comes up and then it comes down. And then consequently, to form this lower wick, price needs to come down and then price needs to come up. Now, this might seem a bit elementary, but once I put all the pieces together, you'll see why I'm kind of going through this now. But, let's take a look at this one as well. So in order to form this upper wick, price needs to go up. It needs to reject from that high, and then it needs to come back down. And then same thing over here. To form this lower wick, price needs to come down. And then consequently, this wick is a rejection, so it needs to come back up. So that is how these wicks form, right? So this wick is nothing more than price coming back down. And then this lower wick is nothing more than price coming back up. Same thing over here. This wick is nothing more than price coming back down. And this wick is nothing more than price coming back up. So with that being said, let's go over to the next chart, and then you'll see kind of why I'm bringing this up. So in the next slide, whoops. So here is this chart. And then let's kind of take a look at what's happening here. So what's happening here is that price has gone up, it's gone down, and then it's come back up, and then now it's come back down, and then from there, price has gone back up. All right, so that's simple enough, but let's take a look at something a bit closer, right? So right here, remember when I said that a upper wick is nothing more than price just coming back down, right? So in order for price to come from here to here, from here to here, that means that price needs to be selling off. Now, I know that there's down close candles and up close candles in here, but let's just ignore those, right? And actually, let's ignore all of this price action as well. Let's box that out. That way it doesn't confuse anybody. Actually, let's make that a different color because I'll use the color red in just a little bit. So all of this is non-existent at the moment, and we're just focusing on from here down to here, right? So in order for price to go from here to here, it needs to sell off, right? So it starts selling off primarily from that wick, and then it comes lower down to here. And then remember what I said about the lower wicks being nothing more than price just coming back up. So from this lower wick all the way to, whoops, let's get my drawing tool back. So from this lower wick all the way back up to here is all buying, right? I know there's some down close candles in here, but in order to get from here all the way to here, price needs to be going up. There needs to be some buying or a lot of buying happening in order to take price from this price point to this price point, right? Regardless of the up close or down close candles that may form within this price range. So from here all the way to here is only buying. So the last time that any type of selling was offered in the marketplace would have been at this high right here. Because remember what I said, in order to form that upper wick, price needs to sell off from it, right? So price sells off from that wick, and then ever since there, price has only been going up after it created this low, right? So it's only been going up. And then in order to efficiently deliver this market, price needs to come back down and then offer the participants here a chance to get in. So let's kind of take a look at this in a different way. So from here to here, we established that that's all selling. So let's just look at it like this. All right, so if it'll let me draw. All right, so all of this is just selling. Price came from here to here as a result of selling. And then consequently, price came from here all the way up here as a result of buying. So you guys can kind of see that there's no selling that's offered at this price level. Oops. So let's make this a different color. So there's no selling that's happened since this point in the market, this black line. This was the last time that any selling had even taken place in the market. So what price wants to seek to do is it wants to offer selling back down into at least this level so that that way all of this is efficiently delivered, so that all of this is fair. All right, so what we see is price comes back down and then it now offers selling. Yes, it does overshoot it, but that's fine because the logic is surrounding this level right here. So price came down, price came up. It only went up. There's no selling that's offered since price came down from here. So price needs to come back down to at least this level and then offer some sell side, right? Because in order for price to come from here to here, it needs to sell off. So that's sell side being offered right here. And then it needs to offer to at least here That way, that all the participants in the market can have a chance to get involved at this level. So let's kind of take a look at the advanced logic behind this a little bit. So right here, the sellers got involved. Oops. Right? Sellers got involved, buyers got involved, right? Everybody's happy. And then what happens is only the buyers are involved here, right? Those are the only participants in the market that are involved. All right. And then let's understand that the market makers are still trying to potentially bring this price higher. So remember, these guys, the buyers, they're happy now, right? But what happens is there's no sellers here, or there are sellers here, but there wasn't any selling offered at this level. So what happens is that there's still willing sellers at this level, right? That's why I say that there's sell side liquidity resting inside this area, because there's still sellers that want to get involved in price that haven't been able to do so. So price comes back down. And then on the other side of that, there's the market maker, right? And then the market maker, he has his buy order right here, because this is a level of fair value, right? So the market makers want to buy at fair value or discount, and then the sellers want to sell around this level. So in order to buy from somebody, you need to sell to them. And in order to sell to somebody, they need to buy from you. So what do? Market maker sells to the sellers, and then this guy, the sellers, is buying from the market makers here. And that's what's happening when this order block forms right here, right? So that's why we say that order blocks form at levels of fair value, right? Because there's just a liquidity exchange going on over there. And then from here, the market makers seek to usually take price higher. Now, we have seen examples where price comes back to these levels of fair value, and instead it does something like this. It'll come back down, and then it'll do something like this and tank. So when price does that, what we can say is there wasn't enough sellers for the market makers to buy from to take this price higher. So that's why they take the market lower. You know, just as a simple analogy, you can think of it that way. If price were to, potentially go lower from here, but it doesn't, so we can use that other analogy that I gave you guys. So this is a bullish example. Hopefully this made a little bit more sense to you guys. But now let's take a look at a bearish example, and then we'll close off this video from there. All right. So using that same logic from that last one, notice what's happening here. All right. So price comes down at this wick, right? And then remember, a lower wick is nothing more than price rejecting and coming higher, right? So it rejects, comes higher up to here. And then, oh, whoops, let's make that a bit thicker. So rejects, comes back up to there. And then as you guys know, a upper wick is nothing more than price rejecting from the top side and coming back lower. So here we come back lower, and then here, some of you guys can already see what I'm pointing at. It rejects, comes higher, hits this level, and then it tanks, right? It goes lower from there. So what's happening here? Let's draw in those boxes just one more time. So here, selling, right? Because in order for price to come from here to here, it needs to sell off, regardless of how many up close or down close candles are there, right? Because in order to go from here to here, you need to go down overall, right? And then price goes from there all the way up to here. And then all of that is a result of buying, all right? And then here, there's a slight inefficiency, right? There's no sellers here, but that's okay because what does price do? Price offers selling around this area and comes all the way down here. So now what happens is there's a inefficient delivery in price. So the last time that we had sell side offered, or buy side offers, I should say, is over here, right? This green was all buying, right? Since we left that low and went up to that high, that's all buying. We came down all the way as a result of selling, and we have people that are willing to be, participants in the market around this level that haven't been offered the opportunity to get involved, right? So there's still orders over here that the market wants to seek to get. All right, so what does the market do? The market offers buy side back into that level. Yes, it overshoots it, but the logic is surrounding this black line right here because this is where the buyers overlap, right? So, or where the buying overlaps right here, right? So price comes back up there. Now that it's efficiently delivered, it can begin to sell off if that's what it really wanted to do. And we see that price sells off. And now, just for completeness sake, let me give you that example of the market maker and the seller. All right, so or the buyer in this case. So price comes down, right? There's only selling, so the buyers didn't get a chance to get involved here. All right, so there's tons of buyers at this level, right? Here's their buy orders. And then the market makers, here they are. They have their sell orders. And then if they can find enough sellers, or sorry, if they can find enough buyers at this level, then they can exchange orders and then they can take it lower, right? So here's the sell orders. And then remember, if you're going to buy, you got to buy from somebody who's selling. And if you're going to sell, you got to sell from somebody who's buying. So these guys do a little, what we call a transaction right here. And then the market makers, have their positions established, and then price comes lower. All right, so that's kind of the logic behind this. So what I'm going to do now is I'm going to go back to that first slide, and then we're going to go over everything that I told you from the start, and then we'll close the same way that I started. So let's just go behind the logic surrounding fair value and efficient delivery just one more time. That way you guys can kind of get the complete picture of what's happening in price. So the logic behind fair value or efficient delivery. When price goes to and through a level with only one-sided delivery that doesn't offer all the participants, which are buyers and sellers in the markets, a chance to get involved. Therefore, we anticipate the market to want to go back to those levels where it wasn't fairly traded. And then using our advanced logic that I showed with the pictures, when price is going through a level with only sell side delivery, there is unfilled buy orders there or buy side liquidity. And when price is going through a level with only buy side delivery, there are unfilled sell orders there or sell side liquidity. And there is one reason why price, or that is one reason why price seeks to come back to levels of fair value. And that is in order to pair up orders with a counterparty and offer the potential for continuations. So with that being said, I hope that that was a more detailed explanation into fair value and efficient delivery. And as always, feel free to ask questions, and I'll see you guys later. Cheers.